Hello friends, this is Kapil Sharma from Anand Rathi, and today we welcome you to another AR Weekly Market Podcast. Today on this show we have Mr Osho Krishan, who's our Senior Manager at Anand Rathi. Welcome Osho. So my first question is, what is your opinion on the equity market at the current levels?
Greetings to everyone. Well, first of all, I want to highlight few of the points from our previous conversation where I mentioned the overall bullish stance in the market and the benchmark index to test 15,500 as soon as it breaches above 15,250 levels, and that is what we have seen in the previous week. However, there has been huge volatility as the index has tested both the resistance and support in the entire week and settled on a negative note, lower by 1.2%. From here, looking at the technical parameter, where the Nifty is hovering just above 150% of the Fibonacci retracement, which is placed around 14,890 levels, we could expect Nifty to respect the same levels, while any correction from the same could plunge the index towards the previous swing high of 14,750 odd levels. And this could be considered as a healthy correction in spite of a trend reversal. Simultaneously, on the higher side, 15,200 and 15,500 could be seen as the next potential resistance respectively. So here, what we could emphasize that the immediate support for Nifty could be seen around 14,750 levels, followed by 14,470, which is the unfilled gap on the daily chart. While on contrary, 15,250 could be seen as immediate hurdle, followed by 15,470, which is the 161.8% of the Fibonacci retracement levels. On the other hand, where we have seen dominance of PSU banks in the last week, the broader index Bank Nifty failed to sustain at higher levels and corrected from the overbought zone. This could be seen as some minor correction in the overall banking sector, as on the technical chart the index has closed on a negative note post a doji formation in the week before, indicating short-term blips from the positive trajectory. On technical levels, Bank Nifty has resisted from the 123.6% of the Fibonacci retracement and settled lower from the previous closing of on weekly basis. The immediate support for the index could be seen around 35,400 odd levels, breaching which 33,600 could be tested in the coming week. While on the higher side, if it respects the immediate support zone, then it could bounce towards 36,500, followed by 37,700 and 38,000 levels. However, the overall stance remains to be cautious and stock specific action should be considered at given point of time.
So my next question is, what does the derivative data suggest ahead of the monthly expiry?
For the week, volatility is likely to be high due to the expiry price action. Until now, the range seems to be 14,800 to 15,200 in Nifty, as huge OI buildup has been seen in both the strikes. Any correction from the levels of 14,800 could drag the index towards 14,500 due to the unwinding of put writers, while on the higher side 15,500 call option has the maximum open interest concentration. Hence, any breach above 15,200 could trigger 300 point of fresh rally for the week. While for Bank Nifty, the range seems to be 35,000 to 36,000 with huge buildup in the strikes. However, any decisive breach above 36,000 mark could trigger 1,000 point of rally in the index. But at given point of time, a cautious approach in Bank Nifty is advisable.
So Osho, at present, which sector or stocks should be the prime focus for our short-term investors?
From sector specific, IT has been the consistent performer, followed by power and FMCG counter. That could be the prime focus for investor in the coming future. However, some sectoral distribution has been seen in last couple of weeks, and major focus should be provided to stock specific front in the near future. There have been various stocks which have seen good accumulation in terms of volume, and one could expect them to outperform. From IT domain, HCL Tech is one of the counter which have seen some consolidation from past couple of weeks and continuation of uptrend with major support placed around 930 levels, while the potential upside could be seen around 985 to 1000. The another counter from the same space is Naukri, which has been in the cycle of higher highs and higher lows and is expected to surge towards 5,550 levels in the near future with strong support placed at 4800 levels, which is making it a favorable risk reward ratio for the counter. Even from the front line, HUL is looking strong as it is placed at the crucial support zone of its 200-day exponential moving average on daily chart, and by looking at the historical data, it is expected to surge higher in the short to medium term, while Marico from the same space is expected to surge higher in near future. From the power sector, Tata Power and NTPC should be kept in focus, and these are expected to outperform from the power sector. At the same time, it is advisable for the trader to remain cautious as the market is edging higher, and focus should be given to the stock specific front rather than sticking to some index. Thank you.